Welcome back, everybody. It's another episode of Pursuit of Profit. LeAnne, hello. How are you?
Hi, I'm good.
I want everyone listening to this right now to know that LeAnne is the nation's profit coach, and she's a financial planner, which is awesome. That she has the what do you call that? The 1-2 punch, LeAnne.
I think it's called a 1-2 punch.
That's what we're going to call it, because it is a super unique skill set to actually have the strategy of a profit coach and to have like the intelligence of the financial planner thing in your corner when you're trying to figure out where your money's going. You are catching us in a 5-part series. This is part 2 of frequently asked questions that LeAnne gets around money. So
you mean the questions I get every single day?
Yeah, or the questions that I keep wanting answers to myself in my own business. So LeAnne, what's the second question that you typically get from people?
Are you ready?
Yeah.
Wait, what are you talking about? Shouldn't I be running everything that I can through my business so that I pay less tax?
You need to stop doing this. This is like hurting me a little bit. Ouch. It's so close to home. Stop that.
I'm just like laughing over here. I hear it all the time.
But I think that's like, I think about that all the time. I'm like, okay, well, if I think I've had these conversations with my wife, like, she's like, well, just how are you going to pay for that? And I'm like, well, I need to pay for it on my business account because that's where I'm going to get the tax credit. Like, right. Like I'm going to spend it from my business account because there's a tax credit attached to it.
Give me an example.
Okay. Well, I mean, it's an appropriate example. This is the right thing to do, but like paying for help. If I had an assistant and I needed to pay for some help, like I'm not going to use it on my personal credit card. I would use that through my business credit card because I do want that tax deduction, right?
Sure.
That's legit. Yes.
Yeah, that's legit. What about a gray area one? I'm putting you on the spot.
Okay.
Give me a gray area one.
Well, are
you blushing?
Maybe a little bit. I saw this a lot when I was younger. I think I've gotten better about being sneaky about it now. So,
okay.
Well, last night I had a networking event, and I don't know if this is exactly where it would go, but it was, I think I spent probably $45 in drinks at my own networking event. And now here's the caveat. I didn't do it because I'm like, oh, well, it's a tax write-off, but I might, if it wasn't a tax write-off, I might not have had 3 of the drinks. Right? I might have been okay with 1, but I'm like, whatever. It's a tax write-off. So we'll do 2 more.
Oh, you're such an honest entrepreneur. I love that. Okay.
Yeah, well,
thank you for telling on yourself. You're always so good at that. You're serving the greater entrepreneur community with that.
Listen, if you're listening to this and you're not telling the truth, like you're only kidding yourself, and don't think that you have it all figured out or I have it all figured out. The reality is we're all figuring it out. And so I don't mind throwing myself under the bus if it means that you get honest with your own situation, because I'm getting honest with mine. So
it's awesome.
And that's where change happens.
It's true.
Okay.
So let's tackle this.
Yeah.
So we start this by just some basic logic. Right. So when I'm working with people on this, I'm like, okay, so what you're telling me is you're going to spend $1 to save 30 cents in taxes. Like this is the thing that most entrepreneurs really, truly do not understand. They think that their tax deductions are a 1-to-1 ratio. So if I spend $15 on drinks, then I get a $15 tax deduction. And therefore, if my tax liability is, $1,000, you're just subtracting $15 from that. It's not how it works. Not at all. The way that it works is it's actually a 30 cent if you're in the 30% tax bracket. Like we just have to have a number.
Yeah.
So what you're doing effectively, you think you're sticking it to Uncle Sam. You think you are. What you're actually doing is you're sticking it to yourself, right?
Yeah.
Where you're spending $1 to save 30 cents in taxes. So it just, the math doesn't add up. Yeah. Now, do I do this as well? Do I have drinks with clients? Absolutely. But this is where we get really honest and stop calling it a tax deduction and start calling it what it really is, which is profitless spending. Like, it's okay. It's profitless spending that you also get to write off, but profitless spending makes you profitless.
Right.
Can I be more blunt than that? Like,
I know, that's pretty straightforward. Yeah.
Every dollar, like I love it. One of my favorite phone calls is when somebody calls and says, hey, you told me I need to put $400 every week into my profitless spending account. And I'm like, that's right. That's your plan. And they're like, do I have to? And I'm like, no, you don't have to, because people will once they start paying themselves their profits and once they start putting themselves in a position where their business is serving them instead of them serving their business, then all of a sudden that $15 of drinks has a different ring to it. And you get to make a decision about what's profitable for your lifestyle upgrade. Like, what do you want in your life?
That's good.
I want to drink. Absolutely. Yeah. I'm a wino. I want to go out for drinks with my friends. Yes. Do I want business money to pay for that? Yes. But am I going to just do it so I can write off 30 cents? No.
Right. Okay. So that's the distinction that I'm hearing this, right? Is when you think of it like, oh, this is a tax deduction and I'm sticking it to Uncle Sam. And so let's order another round. That's different than going, hey, I still can have my business pay for this, but let's not kid ourselves. This is profitless spending, and I'm not sticking it to anybody. This is the choice I'm making in the moment to spend my hard-earned money through my business account, profitless spending, because I'm choosing to do that.
Absolutely. And while we're on it, let's just go there for a second. Most people don't know this little, like, let's just do tax advice for just a second. Most people don't understand that when they're traveling. So last week I was traveling. And when I was traveling, I had to eat food on the road, like, or I would starve. And I had to go to Starbucks 3 or 4 times because I was in a conference every day, right? I had to do that. So I stayed awake. And so when I'm on the road and I'm doing that, then my meals and my entertainment, including the paddle boat that I rented so I could go up the canals of Indianapolis, that is 100% deductible because I'm traveling.
Got it.
But if I'm in Spokane, where we live, and I want to go out to drinks with you, Chris, which I do, and we do that, that's only 50% deductible.
Got it.
So it's an even worse situation than you think, because you think, hey, I'm sticking it to the man, but you actually only get a 50% deduction for meals and entertainment when you're not on the road.
Got it. Which then only 50% of that deduction gives me 30% tax break, right? So it's even worse.
It's just bullshit.
It's it's even worse.
It's just bullshit. So it's just profitless spending, but there's a place to do it. And I actually think I own another business, as you know, and my husband is one of the owning partners of that business. And so whenever we can and we go out to dinner, we decide we're having a business meeting and we're sticking it to the business. Like on some levels, like we've really mastered that the business serves us, not the other way around. We're like, we don't care. Like, boom, you're paying for our dinner, right? Well, when we're on a date, we're going to find a way to write it off. Like all of that is good. So.
Okay. But now I got to ask, because that sounds like exactly what you're just consulting against, which is like, so we're going to go make the business pay for dinner and our business meeting. So because it's a tax deduction.
It's just profitless spending.
Got it.
It's I don't actually care that it's a tax deduction, but I like the idea that my business has to buy me dinner.
Yeah.
Because my business serves me, not the other way around. And so I like that distinction with my profitless spending. I'm like, oh yeah, baby, you're paying for this, right? Yeah. I worked so hard to build you and worked so hard to make this profitable that you are paying for my dinner. Yeah. So there's a difference between, which I'm always talking about, there's a big difference between smart cash flow strategy and tax strategy. They are not the same thing ever. Ever.
Right.
Throw it out.
I remember, this is way back when I was out of college, I was working at Starbucks, and I remember people would come in to their mobile office. They use Starbucks as sort of like this mobile office. And I would always hear these conversations like, oh yeah, we just bought a refrigerator because it's a tax deduction. And I'm like, what? That makes no sense at all. Why would you spend so much money to just have a refrigerator because it's a tax write-off? I'm like, I don't get it.
Don't do it.
So the heart of this conversation then, LeAnne, is that how you can spend money in your business. You can even have profitless spending in your business.
We all do.
But it's when we kid ourselves that I'm going to stick it to Uncle Sam and I'm going to get a dollar for dollar deduction in this tax, that I end up hurting myself in my pursuit of profit, right?
Absolutely. Let me just for a second talk to businesses that have inventory, because this is where I see it all the time. Clothing stores or coffee shops or whatever. At the end of the year, their accountants they're trying to help people, and they're like, you need to go spend some money. You need some tax deductions, or you're going to spend all this money in tax. And so what people do is they go out and they buy all this stuff. And they put it in inventory. And what they don't realize is that when they're filing their taxes, they don't actually get a tax deduction for the money they spent in that year on stuff. on inventory stuff. So the big thing there is cost of goods sold. The S is the most important part, because until you sell it, you don't get the tax deduction. So if you, not that we spend for tax purposes, that only happens when we're being crazy or our accountant tells us to do that, right? But I really want people to understand that, especially with inventory, you do not get, you get zero tax deduction for those dollars spent until the product is sold.
Got it. Wow. Listen, that's extra credit on that one. Those of you, you're welcome. If you're listening to this, you're welcome. That just, I think a ton of people do that who actually carry inventory. That's great. Okay, good. Wow. So good. LeAnne, any other final words of wisdom in terms of like this whole tax deduction?
I'm cut off.
I think you hit it pretty good, pretty hard. So
thanks.
If people want to sort of connect with you around like figuring out their money situation, where can they go?
2 places, profitdiscoverycall.com. Okay. And listen here, I know that some of you guys have been listening to this for a while and you're just scared to pick up the phone and talk to some girl on the other side of the country about your money mess. But this is what I do. So let me help you. That's at profitdiscoverycall.com. And we do a 40-minute consultation. And the idea is to really understand what's going on in your business and to see if I can even be helpful. So that's one. Yeah. The other thing is I have my quote unquote ebook, which is only 3 pages long.
Nice. Air quotes.
Air quotes. And it's at pursuit-of-profit.com. And you just hit the ebook button right in the middle of the screen.
Awesome. LeAnne, thank you. It's fun. I'm loving this series. So I'll catch you in the next episode where we deal with the 3rd question.
It's a good one. It's the biggest one.
Oh, it's kind of tease. I like it. Okay. Well, we'll catch you in the next episode. Thanks, LeAnne.
Bye.